This was such a fascinating story because it took place in Phoenix, which felt like kind of a ground zero for the housing bust back in 2008. Except this time around, when the housing market started deflating, it's the little guys who came out ahead.
Yeah, that's the latest twist, right? So like I wrote about the crash way back when, well, 10 years ago, and I was in Phoenix then, and you had investors, private equity firms buying up houses at the courthouse steps, for pennies on the dollar, and now it's the little guys who are just taking advantage of the distress of these large institutions. So it's a real reversal.
Well, what does this then mean when you're looking at the future of essentially the housing market for the rest of 2023? Are we in for some sort of bubble popping, for lack of a better term?
Well, I would say that, this is a one of the markets where you had just a ton of investors of all kinds, but also, the heaviest presence of so-called iBuyers, which I could explain,
Please.
and institute and okay, and single-family landlords. So iBuyers, these are, companies. Well, the biggest company here is Open Door. The idea is they kind of take some of the pain out of the process for sellers. They'll buy the property from the seller for the retail price, and then no paperwork or limited paperwork, and then they turn around and they resell it. So they act like a flipper, but in a way that kind of also like a market maker. The trouble here is that they kind of got caught because they were accelerating purchases right before home prices started to fall. So they got caught with a lot of overpriced properties that they had, and now they've had to like slash prices to get
Okay.
homes sold.
So they were in it until the very end, and they got caught flat-footed when the market turned on them. What about these small investors, these individual home buyers who are coming in? What do they have at their advantage? Because borrowing costs for them have also gone up as well.
Yeah, I mean their big advantage is they bought low in most cases, right? So they looked for uh, homes. They sort of did what traditional flippers do, which is they make money on the buy. They make sure they pay a low price for whatever they purchase, and that's for the most part what they were doing. And so when the housing market turned, it wasn't great for them, but they had enough of a margin, that a lot of them walked away, relatively unscathed. They had, they put a lot more maybe into renovations, but they also were buying at a lower price and, and still selling for more than what they purchased for.